Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about trading the first 5 minutes and trying to decipher what the market's going to do once it opens up. Now here we have the S&P, the 1218 contract, and in terms of indicators, we have the first 5-minute candle outlined, which is that kind of orangey box, and then we also have the previous day's high, low, and close. So there are a couple things to kind of figure out when we're looking at, is this going to be a strong up day, a strong down day? Is it going to be neutral? What's the anticipation? So right out of the gates, within the first 5 minutes, there's a lot of information that's being thrown at you. First of all, where did it open compared to yesterday, right? Did we gap down? Did we gap up? Or did we open right on top of the same closing price? We kind of want to get a feel for, is this continuing yesterday's giant bull run, or are we going range bound? Are we, where are we in relation to yesterday? And that's easy to see by this little kind of bluish purple line here. This is yesterday's close, and we opened up down here. That is called a down gap, right? We opened up down from yesterday's closing price. So that also means that if we look at this, is this an inside gap or is this an outside gap? Now what I mean by that is looking at yesterday's range, right? So if yesterday's range is here and we open up here, that would be an outside gap up because it's gapping up and it's outside of yesterday's range. This, in this case right here, would be an inside gap down, meaning that it gapped down, but it's still inside yesterday's range. And we can see yesterday's range with the high and low of yesterday right there. So we know that we opened up inside of the range rather than out. Now, just thinking about this logically, opening up outside of the range could mean one of two things. We're either getting ready for a continuation move, a strong move in one direction, or an attempt at that strong move and a failure, right? When you have an outside gap, when it comes back into the range, that's usually where you find a lot of orders waiting. So let's see if we can find an example of that. Here's an outside gap up. We have yesterday's range right here. And again, just for clarification, I'm talking about yesterday in relation to where I'm looking at the chart. So this is, just so you know, this isn't yesterday per se, but this is yesterday in relation to where we're looking here. This is the previous day's range inside here, and we opened up with a gap up, right? So this is an outside gap up. Yesterday's close was right here, and we're gapping up outside of yesterday's range. That is signaling that we are looking for either a potential strong continuation to the upside or a failure move back down again. Now, generally speaking, markets are always looking for some form of structure. They're looking for an objective. Markets are always looking for an objective. Could be a retest of a major swing. It could be a retest of yesterday's range. Could be a gap fill. Could be any number of things. But when you're looking for a bias on the open, you have to look at it and say, well, are we in an area of interest, right? Are we at a structural zone of interest? Are we at the gap fill? Are we at a trend line on the daily chart, right? Those are the things that you're really going to be looking for. So if we look at today, what are some clues that we had? Well, we had an inside gap down. Yesterday was a very strong day to the upside, and we had an inside gap down. So that would lead me to believe that this could be a pause type of day. We're stalling a little bit. Buyers might be accumulating for longer term positions for another leg up. Whatever it is, we're not looking for major continuation because, well, we inside gap down. If we do get continuation today, it's not going to be as strong as if it would have been if it was an up gap outside of yesterday's range, right? So in this case, we have an inside gap down, and we're right on top of an area of interest, right? Look through here and look at all of the support and resistance coming in on that zone. That's going to be an area of interest. The first 5-minute candle comes up and pokes it and shows some weakness, and the second candle breaks out. So we have a breakout of a structural area of interest that would deem likely a bullish move continuation to potentially fill the gap. We haven't filled the gap yet, and in fact, it actually pulled down really far. Didn't break the low, though, before trying to turn back up. So we have a structural area of interest that buyers may be coming in on. If we go back a little bit from previous, we can see that sometimes it won't be as obvious. We have an outside gap up, and it never pulled back to test the previous high of day or anything like that. So what we want to do is we want to go back and look at this area and say, hey, does this line up with anything? The easiest way to do that is just to fix the chart. There we go. And we'll just go back in time and see if that lines up with anything. And, well, here we go. Okay, so we've got some areas of interest. Arguably, I would put the level a little bit further up, probably around here. I think it looks a little bit better at 76 3/4. Now, the reason I like it there is because we have resistance, support, and resistance. Resistance, resistance. It just fits better. So that would be the area of interest. And again, the market's always hunting for objectives. So if you look at the current price, where did the market find support at? Right at that area of support. There's a reason why we look back at previous structure, right? There's a reason why we're looking at it in the first place, and that's because you get things like this. If the market's looking for an objective and nothing is apparently obvious, then we have to go back in time a little bit and see if something lines up. And we can see a double test of that area showing some very strong bullishness. Now, not only is the market looking for, strength on the open, we're getting the opening print, we're gapping up, gapping down, inside or outside yesterday's range, but we also need to look at that first 5-minute candle and say, hey, was this a strong candle? Was it a weak candle? Sometimes it'll open up as a doji. That's about as weak as you can get. What are the clues that the market's giving us? In this case, we have an outside gap up. Actually, let's look at a different one, right? We've been looking at that one for a while now. So here's another really good one right here. This is yesterday's range, so obviously this is an inside gap. Yesterday's close is here, so we had an inside gap down. Barely. I mean, it gapped down like a point or two. So you have an inside gap down, but look at that first candle of the day. That is a monster of a bull bar. And with that amount of bullishness to the upside, we're coming right into yesterday's high right there. That correlates to that high there. We have a close there, and we have a monstrously bullish bull bar that kicks the day off. Well, in this context, we're rushing up towards the highs of yesterday, right? We're coming into the previous day's range, and that's where normally I'd be a little bit concerned. But if we look at yesterday's movement to the upside, right around 12 o'clock, we found support and rallied up, pulled back, and now we're coming into today. You can kind of think of this as a continuation move of yesterday's kind of pullback. And we're looking for a breakout of the highs. And with this strong of a bull bar, breaking back above the close could be looking for a pretty strong one at that. Now, one of the cool things you can do with a 5-minute range is, if it weren't obvious enough here, is you can bracket the 5-minute range as a level of support or resistance. It is its own level of support or resistance, as we can see several times throughout here. But along with that, you can actually measure this first 5-minute candle and kind of gauge whether or not you could be looking for a double up, a triple up, anything like that, in the sense of measuring the distance itself of the 5-minute candle, right? So measuring this distance and saying, okay, I'm looking for an upside objective. I really don't have any objectives right now because we're breaking out of structure and everything's kind of done. What's another objective that we can use? Well, let's take that range and move that up on the highs. And guess where the market found some resistance? Well, what do you know, right? It found some resistance at a double up off the initial 5-minute move. Crazy, right? Would have never guessed. Whenever there's a situation where there's not really anything easy, you either go back in time or you forecast based off of what the market has given you already. And in this case, if you're only looking at the first 5-minute candle, we don't have a whole lot to work with, so that's what everybody worked with. And we can see that that was almost the high of day until quite a bit later in the day when it went flying back up again. And even with that, I'm kind of curious. Yeah, it started finding some resistance at the double deviation to the upside. Either way, that's why these 5-minute ranges are so important, because when you first open up, a lot of information is being thrown at you. You've got the gap. Is it up, down, inside, outside, whatever? Strong bull candles, weak bull candle, doji, bear bar, what is it? And then in context, does it make sense? And if it does, we can look for objectives based off of that. So there's a lot of very interesting things that are happening on this first 5-minute chart, but we also want to look at the follow-through, right? If it was a strong bull bar, it's an inside breakout, an outside break, whatever, what was the continuation like? Right, look at the continuation on this. We have a really strong 5-minute bull bar, and it followed through very heavily. We closed way above the previous candle's high. I mean, we're showing that the market is trying to get that continuation to the upside. In comparison, we have something like this, where we have an inside gap up. We're inside yesterday's range, and we're gapping up. We have a halfway decent bull bar, but there is a decent amount of wick on the highs. But when it comes to follow through, it triggered above the highs and immediately failed lower. Well, right out of the gates, that's telling us, okay, this might not be the strongest day in the world. We might be dealing with the market looking for an objective, right? Initially, it looked like maybe retesting this high was the objective, and they did treat it as support and resistance, but that wasn't good enough, and the market faded all the way back down again. So now we know that the market might be looking for something else. And as we can see through here, lots of support and resistance all through here, all over the place. And we have a bounce off of that same congested area of support to push the market back up again. So this follow through, not only is the first candle strong, but the follow through is also very important to keep track of. And all of these things together can give you some very strong clues in terms of what to expect. Here's an outside gap up, but look at the first candle. the first candle's garbage, right? It's terrible. I mean, it's a bear bar, I guess, in the sense of the way that it closed, but all the wick is on the bottom. There's no emphasis to the downside. And when the market did trap underneath the lows, the follow-through was bullish. But when the buyers tried coming in, they failed back down as well. So we're dealing with more likely a range at this point in time. We come back down, we retest previous high of day. That's likely where we're going to find support. It found support, tested the bottom of the 5-minute range, and then started breaking down real aggressively all the way for pretty much the rest of the day. There are some things that we can calculate off of this as well, right? We had a failed breakout attempt on the downside and a failed breakout attempt on the upside, all things considered. It really didn't go very far. And then it rolled back over. So what are some other things that we can utilize? Well, we have an outside gap, and the gap by itself can be important. We can measure it went this high before it rolled over. So because it went this high, up to 56 3/4, we can also measure this down and say, okay, to the gap fill, we might be able to look for a deviation off of this, right? Everything is measurable. And these first 5, 10, 15 minutes of the day can be extremely important because look what happened at the deviation down. 100% deviation is here at 27.19 Look at the amount of support that came in there. If you weren't watching those first 5 minutes, 10 minutes, 15 minutes of the day, you would have missed that. That's a pretty big deal in the way that the market reacted because it became a resistance later on, support later on, resistance later on. That was a big level for most of the day. So there's always something to measure when you're looking at these types of moves, especially when you have a failure move like we have here where it tries to go up, fails, goes down, fails, and goes back up. You're looking for the measurement, right? You're looking for a potential deviation play. You're looking for something of interest. And when you can involve the gap in yesterday's movement, that makes it even stronger. So it's always something to consider, but what are some things that we can use on this? What are some actionable things that we can use from this? Well, we already talked about a bunch of them, measuring deviations and all of that. But are there any clues that we can get off of that first 5-minute candle for a potential opportunity to trade? The answer is yes, but it's not easy because there is a huge amount of information being thrown at you all at one time, right? Everything's happening at 9:30 for the stock exchange, and it's just you're getting bombarded with info. So you usually wait for the first 5 minutes. I'm not a big fan of trading within the first 5 minutes unless there's something that's really juicy looking, like a big gap and a little tiny pullback, something like that. Otherwise, though, you're kind of waiting for that first 5 minutes to form and then waiting to see what the response is. Now, we can zoom in a little bit closer to like a 1-minute chart because we know what the 5-minute range is. And we can see that not much happened on that first 5-minute candle, right? Not a whole lot happened. Started off the day pretty strong, and they're holding support on the bottom, but not really much going on. And when we tried to form a lower high, it broke out really, really aggressively. And the reason I say aggressively on this breakout is because if we look at where this candle closed, it closed way above the swing that we had inside of here. Nothing was really happening. So now we have an actionable event. This is something that we can utilize to our advantage. And we can say, okay, well, if we can get into this, there's a potential that we will get a 100% move off of the first 5-minute range, or potentially even a little bit wider because of this giant bull bar, right? We know that buyers probably bought the close of this candle. So if we're looking for a 1-to-1 move and we go down to, let's say, the low of that bull bar, which would make a lot of sense for a stop, guess where 1-to-1 ends up being? Bing, 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 bing. Top tick, right? That was the high of day. And it so far, at least, that's the high of day, and it's never come back. And if you want to know why that was the high of day, because everybody who bought this breakout, bought the close, bought the pullback, whatever, they're all taking profit in the exact same location. All of that would not have been possible to see if you weren't watching those first few minutes, right? If we go back to another example, let's look over here on this one. We had an outside gap up, right? Outside gap up, we're hunting for some form of structure, something to give us some clues. Let's zoom into a 1-minute chart. Go back to it again. I thought it would keep me there. And what do we have, right? Well, we know it's an outside gap up, and we're not really getting a whole lot going on. The first candle of the day is kind of meh. We have a strong bull bar, but absolutely no follow through. A strong bull bar again, and now we're seeing follow through, right? This is all within the first 5 minutes. Now we're starting to see signs that, okay, maybe the buyers are taking over. We have 3 at least consecutive strong bull bars back to back. Let's see what happens. It pulls back inside of that first 5-minute range and then immediately rejects back out again. That's a big clue. We could be looking for a double up of the first 5-minute range. We could also be looking for a double up off the buyers who bought this first initial candle, right? So if we look at this 5-minute range and we're looking for a breakout move back above it, we would be measuring that entire distance. And guess where it went? It went exactly, well, almost exactly. It went through it by like 2 ticks. But it went up to that deviation up and then failed all the way back down again. If you're not watching the first 5 minutes of a market that has a pit like the S&P or a stock like the SPY or anything like that, you're missing out on a huge amount of information that you could be getting just simply by looking at the first 5-minute candle. That's really it. Now, a few other things to keep in mind as well, along with the first 5-minute candle, is the first half hour, the first hour, those bigger numbers. That would be the initial balance, which would be that first hour. But these are things that can potentially give you some very strong clues on what to expect throughout the day. Something to think about if you don't watch these already, and just something to kind of consider if you're looking to add that little bit of extra to your trading strategy as it is. That's going to do it for this one. I hope you found it useful. I hope you found it interesting, entertaining, maybe something you can add to your trading tool belt. And as always, like we always say, really just, everything can be measured, but you got to play it safe, right? Always keep the risk in line with your account and never go outside of that risk just to play it on the safe side in case you are wrong. Yeah, it never feels great, but it feels a lot less bad if you're taking the stop that's within your risk. So keep the risk in line. If you have any questions or anything about this, because it can be a relatively in-depth topic, feel free to shoot me an email, jbrink@slingshotfutures.com, and that'll do it. So underneath the video, click on subscribe, throw a like on the video to show us that you like the content, subscribe to the YouTube channel so that you're notified every time one of these videos comes out, and of course, with the YouTube algorithms being a little bit wonky, click the notification bell icon to the right of subscribe so you're notified via email when a new video comes out so you don't miss anything important again. That's going to do it. I hope you had a fantastic trading day today. I hope you have a phenomenal weekend coming up here, not too far away. Monday is kind of a holiday, kind of not. I think the markets will still be open, but I don't know. We'll have to wait and see. Might be a slow one. Either way, though, enjoy, and we'll see you in the next one. Thanks.